Hey everyone, it's Matt Donahue with Mission Financial Planners, and this is your weekly market update. This week, we're going to really just build our update all around the simple idea that we don't want to make things worse. It's a lesson from Stoicism, from medicine, from investing. It's a lesson from life. Marcus Aurelius wrote that we often suffer more in imagination than we do in reality. And that's really true. I mean, when markets become volatile, when headlines become scary, when uncertainty starts to pile up, our biggest risk is often not what's actually happening, it's how we react to it. Markets continue to navigate a challenging environment. Investors are watching ongoing inflation data, interest rates, geopolitical tensions, questions surrounding economic growth. And as always, those headlines are loud. Every day brings a new reason to panic, a new prediction of disaster, or a new forecast that claims certainty about the future. The reality is that nobody knows exactly what comes next. What we do know is that successful investors have historically been rewarded for maintaining discipline during periods of uncertainty. When markets become volatile, many people feel an urge to do something. They want to sell, they want to move to cash, they want to chase performance, or they just abandon the plan altogether, which was a plan they built when things were maybe a little calmer. And unfortunately, those emotional decisions often turn a temporary market decline into permanent financial damage. The reason the Stoicism mindset resonates with me is it's all about focusing on what you actually can control. You don't control the market or interest rates, inflation, elections, wars, or the financial media. What you do control is how you prepare, what your behavior is going to be, and what your response is going to be. When challenges appear, your first responsibility is not to fix everything immediately. Your first responsibility is to not make it worse by panicking, making an emotional decision or an impulsive decision. And as we all know, that's true not just in life, but also in investing, in business, and all kinds of ways. Here's a practical reminder as well. Think about this. The IRS continues to hold billions of dollars in unclaimed refunds from taxpayers who failed to file a prior year return. So if you've fallen behind on your tax filings, don't assume the problem is going to disappear. In many cases, taking action can help you recover funds, reduce penalties, and regain control of your financial decision. The best time to address a tax issue was actually when it first appeared. The second best time is actually today. From an estate planning standpoint, the question I'd like to ask everybody is, what are you really leaving behind? Most people focus on the money, the investments, the property. Well, yeah, those things are important, but they're only half of your legacy. Your values, your stories, your lessons, the example you set, the person you actually are, become the most meaningful gifts that your family's ever going to receive from you. There's a neat book out there called The Ultimate Gift. I'd recommend that you pick it up and check it out. It reminds us that wealth without wisdom will disappear quickly. Financial assets are important, but the principles behind them are what actually endure. So as we head into the weekend, remember that simple principle, right? You don't have to predict everything. You don't have to solve every problem immediately. You don't have to control things that are beyond your control. Focus on the next right decision. Stay disciplined, stay prepared, and above all, hey, just do no harm. Have a great weekend, everybody. We'll see you next week.